Right now, as you watch this, someone else is making money from your mortgage, your pension, every tax payment you make, every government bond issued in your name. Want to know how much you personally owe? About $40,000. That's your share of the $315 trillion global debt.
The world is in debt to the tune of $315 trillion and counting.
We haven't seen this kind of debt since the Napoleonic Wars. We're getting close to 100% of the global GDP.
$315 trillion is a staggering number to visualize.
And it's growing every single second. But here's what nobody tells you. If everybody owes money, who exactly gets paid? The answer isn't China, it's not Wall Street. It's something far more complex and far more personal. By the end of this video, you'll see exactly where your money goes and why you never agreed to it. Remember this, debt isn't just a burden, it's the architecture of the modern world. 1694, England, war with France. The king's treasury is empty. So King William III makes a deal with London's richest merchants. You give me money now, I'll pay you interest forever. Forever, backed by taxes I'll collect from future generations. Think about that. He borrowed against the labor of people not even born yet. To manage this, they created the Bank of England, the world's first modern central bank. And boom. The government bond was born. This changed everything. Suddenly, the state could spend money it didn't have. Lenders got something they could trade, a promise from the government as good as gold. France copied it, Holland refined it. America adopted it to fund its revolution. And here's the twist, it wasn't evil. This system built hospitals, roads, schools. It funded progress, but it also created something new, a permanent class of people whose wealth grows not from work, but from lending. Fast forward 330 years. That system has consumed the planet. Remember this number, $315 trillion. That's global debt, nearly 3 times everything the world produces in a year. The US, $36 trillion. Japan, debt over 250% of GDP. UK, £2.7 trillion. Even China, $14 trillion. So if everyone owes, who's owed? That's where it gets interesting. Let's use the United States, $36 trillion in debt. About half is publicly held, meaning owed to actual investors. Guess who those investors are? 2/3 are American, your pension fund, your 401k, insurance companies, banks, the Federal Reserve itself. China owns $770 billion. That sounds huge, right? It's 2% of US debt. Japan owns more. The UK owns nearly as much. Most of what America owes, it owes to Americans. Want to know something crazy? Here's how it works. The Treasury issues bonds. Banks buy them with deposits, your deposits. The Federal Reserve buys them back through quantitative easing. And where does the Fed get that money? Nowhere. It creates it, out of thin air, with a keyboard. Think about that for a second. Every dollar in existence represents debt somewhere. Your cash, someone's IOU. Your savings, someone else's loan. It's a circular mirror. You pay taxes. Those taxes pay interest on bonds. That interest flows to pension funds, maybe even yours. You're both debtor and creditor. But, and this is key, you're much more debtor than creditor. The UK, same thing. Bank of England owns £700 billion of government debt it created from nothing. British taxpayers pay interest. That money flows to British institutions. Globally, even weirder. Japan lends to the US. The US lends to Europe through the IMF. Europe lends to developing nations. Those nations park reserves in Western bonds. It's musical chairs with money. Everyone holds someone else's IOU. The music keeps playing as long as everyone believes it will. But what happens when the music stops? That's when things get dark. Quick reminder, if you're finding this valuable, hit subscribe. This research took weeks. More investigations coming. 4 times in recent memory, the system has broken. Each time the pattern is the same. Ordinary people pay. Creditors get made whole. Let me show you. Greece 2010, the laboratory. Greece's government admits it lied about deficits for years. Markets panic. Rating agencies downgrade Greek bonds to junk. Private capital freezes completely. The Troika, EU, ECB, IMF, steps in with 110 billion euros to rescue Greece. But here's what they don't tell you. That money didn't go to Greeks. It went to pay French and German banks that had lent recklessly. In exchange, Greece had to implement austerity, massive spending cuts, pension reductions, tax hikes, privatization. The human cost, unemployment, 7.5% to 27.5%. Youth unemployment, 62%. Suicide rates jumped 35% between 2010 and 2012. 20,000 people became homeless in 1 year. Meet Dimitris, a teacher in Athens, 45 years old. 2 kids. One day his pension gets cut 40%. His pharmacy runs out of insulin. He has to choose his medication or his daughter's university fees. He loses his job. His son can't find work. They lose their apartment. That's what 110 billion bailout means. That's what austerity looks like. 2 more bailouts followed. 130 billion euros in 2012, 86 billion euros in 2015. More austerity, more pain. By 2018, Greece owed over 300 billion euros. Public debt, 180% of GDP. The bailout wasn't a rescue. It was a wealth transfer from Greek workers to European banks. In 2013, even the IMF admitted we were too harsh. Too late, a generation sacrificed. Argentina. The Vultures. This is where it gets truly sinister. 1976 to 1983. Military dictatorship in Argentina. They disappear over 30,000 people, and they borrow heavily. Foreign debt explodes from $6 billion to $45 billion. Most of it finances repression, lines pockets of generals. 2001. Following IMF policies, Argentina's economy implodes. Government defaults on $100 billion, largest in history. Most bondholders accept a deal, 70% losses. Take 30 cents on the dollar and move on. But some see opportunity. Ever heard of vulture funds? Here's how it works. You buy distressed debt for pennies, then sue for full payment in US courts, where you'll probably win. Elliott Management, run by billionaire Paul Singer, bought Argentine bonds for $48 million, sued for $832 million. That's a 1,600% profit. 2014. A New York judge rules in Elliott's favor, blocks Argentina from paying anyone unless it pays the vultures first. Argentina can't access international credit for over a decade. Inflation soars past 50%. Savings evaporate. Pensions worthless. 2016. New government settles, pays the vultures $9.3 billion. Paul Singer walks away with billions, extracted from a nation crushed by dictatorship and debt. 2020. Argentina defaults again. The cycle continues. 2008. Too big to fail. September 15th, 2008. Lehman Brothers collapses. The financial system teeters. Fed Chairman Ben Bernanke later testifies. 12 of America's 13 largest banks were weeks from failure. Congress passes TARP, $700 billion to stabilize the system. But here's what makes people angry. Just 6 banks, JP Morgan, Citi, Bank of America, Wells Fargo, Goldman, Morgan Stanley, got 63% of Fed emergency lending, about $500 billion at peak. MIT study. Direct bailout cost was nearly $500 billion, with European rescues and QE, trillions. Meanwhile, what happened to you? Your house lost half its value, your 401k crashed, your job disappeared, 10 million families foreclosed on, driven from their homes. Did you get bailed out? No, you got foreclosed on. Banks that caused the crisis not only survived, they got bigger. After bailouts, just 12 banks controlled 70% of US banking assets. No senior executives went to prison. Most kept their jobs. Many kept their bonuses. Remember that feeling? That rage? That's the system working as designed. Markets learned government will never let the biggest banks fail. Bloomberg estimated this implicit guarantee was worth $83 billion annually by 2013. Permanent taxpayer subsidy for being too big to fail. Sri Lanka, 2022. Total collapse. This one is recent. This one is terrifying. Sri Lanka borrowed for decades. Vanity projects, ports that generated no revenue, airports with no flights. Debt, $11.3 billion in 2005 to $56.3 billion by 2020. COVID kills tourism. Government makes it worse. Slashes taxes, bans fertilizer overnight, destroys tea exports. Foreign reserves collapse. $7.6 billion to $50 million, a 99% drop. What happens when a country literally runs out of money? April 2022. Sri Lanka defaults on $51 billion. Fuel shortage, less than 1 day's supply. People waiting queues for days. Power cuts, 13 hours daily. Schools close, no medicine, no food. Inflation hits 70%. Food prices up 81%. Extreme poverty quadruples. Massive protests. Demonstrators storm the presidential palace. President flees by military jet. IMF steps in. $3 billion bailout. Conditions: spending cuts, tax increases. Privatization, as always. Debt must be serviced first, people second. Wait, let me blow your mind. Remember how I said we owe it to ourselves? Here's the twist. Who exactly is ourselves? When Greece borrowed 110 billion euros, 80% went to French and German banks. When you pay taxes to service government debt, where does it go? To whoever owns bonds. And who owns bonds? Primarily, the already wealthy. Pension funds, insurance companies, investment firms, foreign central banks. So we owe it to ourselves actually means workers owe it to investors. The young owe it to the old. The many owe it to the few. It's not a national debt. It's a class transfer mechanism running in the background of the global economy. Think about that next time you hear, we owe it to ourselves. These crises don't happen by accident. Specific people and institutions make the calls, not because they're evil, but because they operate within a system that rewards certain choices. So who are they? The central bankers. Jerome Powell, Christine Lagarde, Andrew Bailey. They chair the Fed, ECB, and Bank of England. Together they control monetary policy for over $50 trillion in GDP. Powell sets US interest rates. When he moves, the world moves. Emerging markets suffer. Asset bubbles inflate. Your mortgage rate changes. Lagarde controls policy for 20 European countries, 350 million people. During Greece's crisis, her predecessor opposed any debt relief, until disaster was unavoidable. Bailey oversees the Bank of England, which owns £700 billion of UK debt, created from nothing through QE. They meet regularly in Basel, Switzerland, at the Bank for International Settlements, the central bank for central banks, coordinating policy, shaping the system. You didn't elect them, but they control the price of money itself. The IMF. Kristalina Georgieva runs the IMF. 191 member countries. $1 trillion lending capacity. When countries face debt crises, the IMF steps in. With loans and conditions. Austerity, privatization, labor reforms, pension cuts. tax increases. The prescription is usually similar, regardless of the crisis. Greece, Argentina, Sri Lanka, same playbook. Here's the structural problem. The IMF's voting structure gives the US veto power. America controls 16.5% of votes. Major decisions need 85% approval. Western nations dominate. Developing countries have limited voice in an institution that often dictates their economic policy. The IMF isn't evil. It operates according to economic theories about debt sustainability and market confidence. But those theories consistently prioritize creditor interests over social welfare. Three firms control 95% of credit ratings: Moody's, Standard, and Poor's. Fitch. They decide who can borrow cheaply and who pays premium rates. When they downgraded Greece to junk, markets froze. When Sri Lanka's rating collapsed, investors fled. But here's the problem. In 2008, these agencies gave AAA ratings, their highest grade, to toxic mortgage securities that soon collapsed. They were paid by the entities they rated. Conflict of interest much? 2017, Moody's paid $864 million to settle fraud charges. S&P and Fitch faced similar penalties. Yet nothing fundamentally changed. Same firms, same power. Still deciding which countries can borrow. Three private companies, unelected, historically fallible, wielding this power over sovereign nations. So, where do you fit in this system? Remember that $315 trillion, your share $40,000. But here's what really matters: where your tax money goes. US, over $650 billion annually on interest payments. Know what that could buy? Free college for every American. $70 billion. End homelessness entirely. $20 billion. Universal pre-K, $35 billion. Still have $525 billion left. Instead, goes to bondholders. UK, £100 billion annually on debt interest. That's the entire NHS budget. Or free university for every student. Or 2 million affordable homes every single year. Who receives that money? Pension funds, insurance companies, wealthy individuals, foreign central banks. You might benefit slightly through your pension. But the net flow is clear, from the many to the few. This isn't conspiracy, it's structure. The system rewards ownership of debt while requiring labor to service it. That's why global inequality and global debt rise together. And when crises hit, same pattern every time. Banks get bailouts, homeowners get foreclosures, corporations get rescue packages, workers get austerity, bondholders get made whole, citizens get sacrificed, private losses are socialized, profits remain privatized. Thought experiment. What if a country actually paid off all its debt? Sounds good, right? Responsible, prudent. Here's what would actually happen. First, government bonds disappear. Banks lose their safest asset. Your pension fund loses its foundation. The entire financial system uses government bonds as collateral. That collateral vanishes. Second, the money supply shrinks dramatically. Remember, every dollar represents debt somewhere. Less debt equals less money, equals deflation, equals economic crash. Third, global financial system collapses. Everything from mortgages to corporate bonds to international trade relies on government debt as the foundation. Paying off the debt would destroy the economy. The system literally cannot function without debt. Mind-blowing, right? Debt isn't a bug. It's the operating system. So who really owns the world? It's all of them, and us, and none of us completely. It's the architecture of the modern world. Every war, boom, crisis sits on this invisible scaffolding of promises. Governments don't plan to pay it off. They treat debt like renewable energy. Issue new bonds to service old ones indefinitely. Interest is the real product. Rent charged for stability, and the global economy depends on that rent. So, what can you do? First, understand the game. You just did. Most people never will. Second, recognize the pattern. When politicians say, "We have no choice," they mean we have no choice within this system. But systems change. Third, watch what happens next, because another crisis is coming. Could be tomorrow, could be 10 years, but it's coming. And when it does, you'll see it. You'll recognize who pays and who profits. You'll understand the structure. Understanding doesn't offer easy solutions. There's no villain to defeat, no simple policy fix. But understanding changes everything, because it forces the real question: is this architecture inevitable? Or could we build something different? That's the question they don't want you asking. Keep asking it. This is Daily Junkie. Investigations that follow the money. If this opened your eyes, hit that subscribe button. We're just getting started. Drop a comment. Did you know about the Vulture funds? About the circular debt system? What shocked you most? Remember, the system only works if you don't understand it. Now you do.